and she will start us.
Okay, we are broadcasting.
Great, thank you, Mary, and thank you, Jackie. Hello, and welcome to this webinar entitled COVID-19 Response Advocacy, What's in the CARES Act and What's Next? My name is Priscilla Almodovar, and I am the Chief Executive Officer for Enterprise Community Partners. I hope that you're safe and that you and your colleagues are adapting well to this work remote reality. We have more than 1,000 people registered for this webinar. We have people from representing the federal, state, tribal, local governments, nonprofits, for-profits, banks, public policy advocates, investors in affordable housing and philanthropy. It really demonstrates how this public health crisis is really front and center for all of our organizations. So we are delighted that you're able to join us today. Here at Enterprise, this is our top priority right now, and for 35 years, we have been working to support low-income families, and we're doubling down our commitment. You can learn more about the work that we're doing in response to COVID-19 by going to our website, enterprisecommunity.org, but I will highlight two of them. We just launched a new program called Emergency Action for Residents and Partner Stability. Under this program, we will be able to provide grants and technical assistance to nonprofits to ensure that low-income families and individuals can remain in their homes and access support during this crisis. The other thing I'll highlight is through our policy advocacy work, we are working at all levels of government, federal, state, and local, to restore and protect services and support for vulnerable communities and residents affected by this pandemic. Now, on today's webinar, we plan to do three things. First, you will hear an overview of the new federal resources provided by the CARES Act as they relate to affordable housing and community development. That will be followed by a moderated discussion with our honored guests, HUD Assistant Secretary for Public and Indian Housing, Hunter Kurtz. Thank you for joining us. And finally, there will be a call to advocacy for the additional resources that communities will need to continue to fight the economic impact of this virus. I'm so pleased that Assistant Secretary Kurtz is able to join us. He and Enterprise have been working together for many years, particularly because our Senior Vice President for Public Policy, Marion McFadden, and Assistant Secretary Kurtz have been working together on various forms of disaster recovery for the past 15 years, starting with Hurricane Katrina. So I'm looking forward to hearing their expert discussion of what communities can expect as the federal funds roll out. So again, thank you for joining us. And with that, Marion, I'll turn it over to you.
Thanks, Priscilla, and welcome everyone. Next slide, please. Just a few housekeeping notes. All of you have been muted on entry, so please use the chat feature to submit your questions. This webinar is being recorded and will be available on our website after the session, and we'll send you all a link, including a copy of the PowerPoint presentation for your convenience. So again, questions will go into the chat feature. We will save all the questions about the overview of the CARES Act until the end of the webinar, but when we have a moderated discussion with Assistant Secretary Kurtz, we'll take those questions in real time. Next slide, please. So I'm going to hand it over to my colleague, Alec Williams, who's a public policy analyst here at Enterprise, to start our overview of the CARES Act.
Great, and we can go to the next slide. Thank you, Marion, and good afternoon, everyone. It's great to be with you all today. I wanted to start off by giving a quick recap of what the federal government has already done to respond to the coronavirus and explain how we got to this phase 3 stimulus package. The response started really back in the first week of March when the phase 1 deal was signed into law, which you can see there on the slide, the fiscal year 2020 Coronavirus Preparedness and Response Supplemental. And that $8 billion deal was primarily aimed at boosting funding for government agencies on the front lines of fighting the virus, such as the NIH, CDC, FDA, State Department, among others, all received allocations. It also set aside $4 billion to ramp up the production of testing in this country. The second phase, enacted on March 18th, was larger and provided around $100 billion to do four main things: guarantee free coronavirus testing for the uninsured, provide 2 weeks of paid sick leave for those affected by the virus, increase funding for Medicaid and SNAP, and increase unemployment benefits. Towards the end of March, when the negotiations were ongoing for phase 3, we started to see the confirmed cases in the US increase exponentially, and more states and localities started issuing stay-at-home orders. And it became apparent that the first two packages weren't going to be sufficient. So lawmakers went back to work and designed this third stimulus package, the Coronavirus Aid, Relief, and Economic Security Act, or the CARES Act as we'll be referencing it, to be much larger in scale and scope and to provide more than $2 trillion of relief for the millions of Americans impacted by the spread of the virus and the economic slowdown. It also sought to equip our states and local governments with more resources they are desperately in need of to combat this pandemic. And Jackie, we can go to the next slide, and we can dive into some of the specific programs included in the CARES Act and start off by discussing the economic impact payments that will be distributed. This is certainly a provision that has been receiving a lot of focus and attention, so I'm sure this is not the first time many of you are hearing about this, but the CARES Act will provide a one-time direct deposit of $1,200 for individuals with incomes up to $75,000, plus an additional $500 per child. This amount will be reduced for higher income taxpayers and will be completely phased out for single taxpayers with incomes exceeding $99,000. If you are a married couple earning up to $150,000, you will receive $2,400. And again, this amount will be reduced for families with higher incomes and would be completely phased out at $198,000 for joint filers. The IRS will be responsible for administering these payments, and they'll essentially function as a federally refundable tax credit. They'll determine benefit levels and eligibility by using 2019 income tax filings. And when that information is not available, they will rely on 2018 tax data and Social Security data. And we can go to the next slide. And Marion's going to go through some special circumstances with this program.
Sure. So as Alec mentioned, there are income caps on the families who can receive assistance. There was some confusion about Social Security filers. So initially there was a suggestion that they would have to fill out a tax return of some kind. That is no longer the case. Social Security recipients will get an automatic payment provided to them. One of the challenges we're seeing is that people who do not have banking information on file with the federal government through Social Security, or because they didn't pay taxes for 2019 or 2018, they may not have been required to. Or if they paid but sought a paper return, those kinds of information about their banking is not on file. So they will have to receive paper payments, which will take longer than the automatic returns, which we expect to start flowing in the next 2 weeks or so. People who do not have a Social Security number are ineligible for assistance. Generally, children are considered 18 and under, but here children who are 18 or 17 and some disabled or elderly dependents are not going to qualify for the $500 rebate for their parents. And new babies born this year will not be eligible until next year. And then in the case of parents who are living separately, only the primary custodian parent can claim the child. Next slide.
So the CARES Act also includes $250 billion to expand unemployment benefits. And this is what Senator Schumer has been referring to as unemployment on steroids. And it's going to be essential given that we've had a couple record-setting weeks with close to 10 million unemployment claims. And to put that number in perspective quickly, just in the past 2 weeks, nearly all of the jobs gained in the last 5 years have been lost. So this program will truly be critical. The most important changes that are made in the CARES Act in regards to unemployment that people should be aware of are: 1, an expansion in eligibility, so who qualifies, and 2, an increase in the duration and amount of benefits. This act makes sure that self-employed and independent contractors can receive unemployment during this public health emergency, although at the state level, these workers will only qualify for half the average unemployment payment. It also makes benefits more generous by adding a $600 a week across-the-board payment increase through the end of July. And for those who need it, the legislation also provides an additional 13 weeks of benefits beyond what states typically allow for. And we can go to the next slide.
Okay, one of the key components of the Act has been a dramatic expansion of funding and authority for the SBA to provide loans. These include loans for small businesses as well as private nonprofit organizations. So Congress already had given the SBA authority to do what's called economic injury disaster loans, the EIDL program, which include an advance of up to $10,000, which should be available in just a number of days. Creditworthiness requirements for that program have been eliminated or streamlined, and an additional $10 billion has been made available. The key difference between the economic injury disaster loan and the one you've been hearing about in the news, which I'll present next, is that economic injury disaster loan does not have a forgivable component. So while we're seeing a huge rush on the other forgivable loans that are available, we expect that EIDL loans will be available, and so encourage nonprofits or small businesses who need cash immediately to go to the SBA through both programs, starting with the economic injury disaster loans. Here, the maximum available is $2 million at a fixed rate of 2.75% and a maximum loan term of 30 years. Next slide. So the SBA Payment Protection Program is one of the greatest components of the CARES Act. It authorizes up to almost $350 billion for the SBA in forgivable loans for small businesses who keep their employees on board during the crisis. So the loan amounts can be partially forgiven as long as those employees are kept on the payroll. Employers who have terminated their employees already or laid them off are able to bring them back and retroactively pay them if they receive funding under this program. So nonprofits are eligible to apply. So those are generally nonprofits with 500 or fewer employees, including through their affiliates. And again, as long as the funds are used to make payroll and associated costs, they can be forgiven in part. So guidance has been that only about a quarter of the costs that are not related to payroll will likely be eligible to be forgiven. So applicants should not expect 100% forgiveness of a payment protection program loan. These loans have been, as we understand it, flying off the shelves at the SBA. So we encourage anyone who's interested to look at the guidance provided on SBA's website and get to the website to apply as soon as possible. Next slide. Again, small businesses and sole proprietorships can go ahead and apply, and those are open right now. Starting April 10th, independent contractors and self-employed individuals can apply for and receive loans to cover their payroll and other expenses. Generally, what we're hearing from the field is that SBA-approved lenders are working first with their existing customers. So to the extent that you have a relationship with an existing 7A lender, we strongly encourage you to work with your current bank to seek this loan. And big question for us is whether the SBA website will be able to withstand these unprecedented numbers of visitors who are coming in. Also, there is concern that the money at the SBA is going to run out in a matter of days. And so we're already hearing interest from the Senate in putting additional money into this payment protection program fund. Next slide.
So I also want to include in here just a brief overview of some of the other significant spending items that were included in the CARES Act before we get to more housing related provisions, because these allocations will also be essential for how our communities are able to respond. And one of the most important ones is included in this package is the support it provides to healthcare workers on the front lines of this fight. It delivers $117 billion directly to hospitals and veteran healthcare facilities. It sets aside $16 billion so we can add to our nation's strategic stockpile, purchase more personal protective equipment, ventilators, and other important medical supplies. And scientists studying vaccines and therapeutics and running various diagnostic studies will also get $11 billion to further advance their work. And you see a few other items included there. And yes, these will be available after the presentation for reference. So for the sake of time, I'm not going to list out the rest. And for that, we can go to the next slide.
A few other noteworthy provisions from the CARES Act. There's been a suspension of all payments on federally held student loans with no interest or penalties through September 30th. It also means that Department of Education cannot garnish wages, tax refunds, Social Security benefits that borrowers have in order to collect on defaulted loans between now and September 30th. And under the guidance that was released recently, companies have to turn off automatic payments for borrowers who've set that up. Borrowers, of course, can still opt in to make payments, but there will be no automatic taking of funds to repay federal student loans. This does not reach private student loans. There's been a call among many for private student loans to adopt some kind of universal provision of forgiveness or delay in payments owed, but we have not yet seen that on the large scale. Next slide.
So the legislation also provides an infusion of $45 billion for FEMA's Disaster Relief Fund, which will allow them to help coordinate and manage certain response projects that just overwhelm state resources. And there below, you can see how it will be split up and when they will be reporting the costs. The legislation also includes $400 million to fund a few other FEMA programs. And I'll highlight that last allocation, the $200 million for the Emergency Food and Shelter Program, or EFSP, which will provide support services to families that find themselves in sudden economic crisis. And ESFP was established originally to supplement and expand the ongoing work of local social service organizations, both nonprofit and governmental. So there's a potential opportunity for partnership there. And Jackie, we can go to the next slide. Great. So the CARES Act also sets up a $150 billion coronavirus relief fund for state, tribal, and local governments to help broadly cover really any necessary expenditures incurred due to the coronavirus. We expect these funds to be distributed by the end of the month, and they will be released to states based on their relative populations. The minimum a state can receive is $1.25 billion. And in order for a local government to qualify, it needs to have a population above 500,000. The Center on Budget and Policy Priorities has done some excellent work recently on forecasting how these funds will be split up, which I recommend everyone review. And as of now, they are projecting that state governments will end up receiving about $110 billion of that total allocation, or 79%. And local governments will receive the other 21% of the funds, which comes out to be about $29 billion. A few other things of importance to note: $3 billion was set aside for making payments to the District of Columbia, the Commonwealth of Puerto Rico, and the United States Virgin Islands and other territories. It was certainly a controversial decision to include DC in this group, and there has been significant pushback against that choice since. So we'll see how lawmakers handle this in future packages. $8 billion was also put aside for making payments to tribal governments. As far as how these funds can be utilized, while the funding cannot be used to replace already allocated state funds, the nature of these dollars is broad. For example, we believe that state and local governments could theoretically use these dollars to help address the needs of people experiencing homelessness and low-income renters impacted by the pandemic.
Certainly states, local and tribal governments, and large size local governments which are eligible to receive these funds are going to face some challenges in honoring the requirement of the law that they not be used for any expenses that were already in those budgets at a time when tax collection is going to be likely much lower than what was expected, since we're seeing declines in sales tax and income tax over this period. Next slide.
Great. With that, we can transition to housing. And in this bill, HUD saw one of its largest ever one-time increases in federal funding with an allocation of $12 billion, or roughly a quarter of HUD's annual budget. This was certainly an important start, but given what we anticipate the economic conditions to be in the weeks and months ahead, there will almost certainly be greater need. HUD has moved very quickly to start to distribute these funds, and just last week they announced they are making available roughly $3 billion through its CDBG, Emergency Solutions Grants, and Housing Opportunities for Persons with AIDS programs. As far as the total allocations the CARES Act provided, you can see that list below. Marion will touch on how the CDBG program will be administered in a second, but for the sake of time, I'm not going to read through the entire list. But again, if you'd like to go back and access this slide, it will be made available after the presentation. We can go to the next slide.
So in the CARES Act, we see some key provisions designed to keep roofs over people's heads. So this includes a moratorium on foreclosures for all federally backed single-family mortgages. So these will include single-family mortgages insured by USDA, FHA, the VA, Fannie Mae, and Freddie Mac for 30 days beginning March 18th. Under the legislation, a borrower with a federally backed mortgage who's experiencing financial hardship due to coronavirus may also request a forbearance of up to 180 days, which then is extendable for another 180 days. Next slide. The law also allows multifamily housing owners who have a federally backed mortgage to request a forbearance of up to 30 days, which can be extended for another 60 days, on the condition that they agree not to evict tenants or charge those tenants late fees. The law also includes a moratorium on filings of eviction for renters in homes that are covered by a federally backed mortgage for 120 days from enactment, and provides a temporary moratorium on evictions for most residents of federally subsidized apartments, including those that have been supported by HUD, USDA, or Treasury, and that includes low-income housing tax credit developments. All in, it's our back of the envelope calculation that fewer than 50% of American households or who rent their homes are going to be covered by these protections. Next slide. So we're hearing lots of questions and interest in how the supplemental CDBG funding is going to flow. So again, this is $5 billion that's going to be provided by formula to states and localities across the country who currently receive the CDBG fund. HUD already made an allocation, which included $2 billion in direct funding for states and localities under the current formula. The allocation was made immediately in compliance with the law. The legislation also included an additional $1 billion that's going directly to the states to prevent, prepare for, and respond to coronavirus. Those funds are interesting in that the states are allowed to use their funds where they normally use CDBG funds, as well as in cities that receive their own CDBG allocations. So you may see your state acting a little bit differently in the allocation of that portion of the HUD funds. And then the remaining $2 billion will be allocated by HUD with a new formula determined by the Secretary, which will be based on coronavirus-related factors about the spread and risk of the disease, the economic impact, and housing-related impact. Unlike the annual CDBG program, there are no caps on the amount of this assistance that can be used for public service grants. So these are grants that are provided to nonprofits for multiple activities. Ordinarily they are capped, but here again, no limit on the amount of those funds. Next slide. With the CDBG funds, with the public and Indian housing funds that are provided to HUD, there's broad waiver authority. Also with all the HUD funds actually. So here, HUD is giving the Secretary of HUD the ability to get regulations out of the way like HUD would normally do, but also to get to bend the statute legally to make it fit for coronavirus related activities. There are a few exceptions. Generally, HUD will not be able to waive the statutory provisions related to fair housing and non-discrimination, related to labor standards such as the Davis-Bacon wage rates, and related to environmental review. Environmental review relates to inspection of units, so looking forward to discussing that with Assistant Secretary Kurtz and how the department is thinking about that. This is the kind of authority that is provided to the department under emergency supplementals, such as natural disaster grants under the CDBG Disaster Recovery Program, and it was provided under the Recovery Act. So HUD has a lot of experience in figuring out what can be done to make these programs work more efficiently. Here, of course, there's a new challenge related to coronavirus, given the speed with which the funds are needed and the newness of the activities that may need to be created. Next slide. The federal law generally prohibits, after disasters, a duplication of benefits. The core of this provision is ensuring that you don't use a federal grant to cover a cost that's already been covered by another source. However, it's okay to bring in a federal grant after another source has come in if there is remaining unmet need. So if, for example, grant from philanthropy pays part of a cost, a federal grant can come in and pay the rest of the cost that's needed to meet the overall loss for the organization. Next slide. Quick note, which is to say, after an emergency or during an emergency, there's a lot of pressure to move very quickly and be creative and flexible with the funds. However, the funds still come with the force of federal law and enforcement by the agencies and their offices of Inspector General. There are actually multiple bodies that have been set up under the CARES Act to ensure that taxpayer dollars don't become subject to fraud or misuse. So the Inspector Generals already have been reaching out to prospective recipients of funds to let them know that they will be watching carefully, all of which is to say, if you end up a recipient or subrecipient of the funds, beware that the desire is there to be flexible, but you want to make sure that you're in compliance with the law at all times, because the Office of the Inspector General and the agencies will be checking. Next slide. Okay, apologies for the quick overview of the CARES Act. We wanted to make the best use of your time and save plenty of time for discussion with Assistant Secretary Kurtz. Welcome, Mr. Assistant Secretary. Pleased to have you.
Great to be here.
As Priscilla mentioned, Hunter and I have been working together for a very long time. We first met after Hurricane Katrina. So I can tell you from the bottom of my heart that the department is in great hands with someone who has worked on natural disaster recovery and economic recovery, working at the federal level as well as in the city of Detroit. So welcome, Hunter. Mr. Assistant Secretary, please tell us, what are you hearing from public housing authorities, from Indian organizations who are receiving your funds from around the country, and how are you planning to use your terrific waiver authority to speed these funds?
Well, thank you. Well, first of all, before we start, just thank you to everyone. I mean, if you've heard me speak before, I like to say that, you know, I always like to thank everyone because what we do is so important. You know, just in the Office of Public Indian Housing, we're assisting around 3.5 million families. And when you look at HUD, you're looking at, you know, tens of millions of people that depend on the programs and in economic development and housing that we're doing every day. And I honestly think that today, a lot of what we're doing is more important than it has ever been before. You know, providing somebody with a home and a place to live is one of the easiest and best ways to stop the spread of this disease during the pandemic. And I think it's, you know, what we're doing is incredibly important. So thank you all. And along those lines, you know, some of the things we're working on are obviously the distribution of funding, and also in trying to ensure that public housing authorities and tribal designated housing entities have the ability and the flexibility to distribute those funds in a timely and quick manner. So the first thing that we're really excited about that we're hoping to see out either later this week or the beginning of next week is a large waiver packet that we've been putting together. I have, you know, as the Assistant Secretary of Public and Indian Housing, I have the authority to do individual waivers for public housing authorities. We have never had a broader waiver authority before, and the CARES Act granted us that. I may call it blanket waiver authority, but someone I know, who you all may know, that used to work at HUD, possibly with me and was an attorney, encouraged me to call it broad waiver authority. So thank you, Mary. But no, we're really excited about this. We're looking at waiving a lot of the reporting requirements that are due right now. We're postponing those reporting requirements. As you know, we've already stopped our REAC inspections in both multifamily and public housing buildings, but trying to expand that to the housing quality standard inspections that need to be done for housing choice vouchers. and other things as well as meeting requirements that public housing authorities have. Like, we don't want people gathering to discuss what the public housing authorities are doing as it relates to, especially as it relates to distributing the funds from the CARES Act. Additionally, we're working at, to get the funding that we have out on the street as quickly as possible. We got the Native American Housing Block Grant funding. Was part of that package that went out on Friday. That's about $200 million and went via formula to the tribal designated housing authorities. We have an additional $100 million in the ICDBG program that we will be putting out a notice for here in the near future. In the tenant-based rental account, we received about $1.25 billion. I think 600, most of that in the admin fee account, and then some in the HAP accounts. We're looking at getting those out, as well as the $685 million in the operating fund. That's different than the $1.2 billion for the TPRA account. We're looking to get out as much of that funding as we can over this next month, though we're looking at, depending on the program, tranches for some of them. But again, you'll be seeing that here shortly. So we're excited about what's coming out and how that can help what you all are doing at the local level to really assist families that are impacted by this, this pandemic.
Thanks for the overview. Can you tell us the kinds of concerns that you're planning to address through those waivers? So, for example, what extra flexibility there may be in terms of deadlines, what PHAs and other recipients can be doing to meet the particular needs of elders and other medically fragile populations?
Sure. I can't speak in specifics currently because we're still going through the clearance process, and we're prohibited from doing that. But generally, like I mentioned, we're looking at the reporting requirements and trying to relieve all the various reports that PHAs have to submit to HUD, so that they're focused on really assisting the families. This is, I've talked to a lot of the executive directors out there. This is really a life and death matter for a lot of these folks. Public housing authorities are providing basic needs and services to their residents. So we don't need them worrying about, various reports that are due to us. We can worry about that on the tail end of this, and we'll figure that out then. We're also looking, like I mentioned, inspections to see what broader authority we can give to public housing authorities as it comes to HQS inspections. Additionally, we're looking at broader authority for any type of face-to-face interaction that public housing authorities have to have with their residents. Look, I'm going to be the first to admit we're probably missing something. It's probably not comprehensive. There's probably something that we're going to have to get in the tail end. So we are considering, after we get this out, let us know what we haven't done, and we'll try to hit it in another round, because we obviously want to provide as much flexibility as we can in these really important times.
This is doing policy making at warp speed. This is like nothing really that's ever hit Washington, right? So
no. Well,
we appreciate how quickly you're getting the money out the door and the challenge in front of you.
We've never had even this ability to do this sort of broad waiver authority. I mean, it's always been individual, and I appreciate those that helped convince Congress that we needed this, because I couldn't sign over 4,000 waivers on every subject matter for all the public housing authorities. Just physically signing them would have taken so much time, regardless of you submitting them, us receiving them, and then processing them. It was just not doable.
I was really happy to hear you say you're looking at how you can deal with housing quality standards, HQS, because one of the questions on our minds, and you may not be able to answer this yet, is whether the available funds will give you the ability to allow new vouchers. And in order to get new vouchers out there, presumably there would need to be some kind of an inspection.
Yeah, I think that's really going to be a decision at the local level that the public housing authority is going to have to make, how they're going to use the funds. But we will have implementation notices that will come out with these funds to explain how it has to be used, because Congress does make it clear that all of this funding needs to be used in some sort of relationship to COVID-19.
Mm-hmm. And it was great to see that the community planning and development grants for homeless programs provided explicit environmental waiver authority, so that you don't need to do the regular kind of inspections you would do for emergency shelters. So it does seem that Congress is focused on the need to get rid of, or at least to delay those inspections.
Yeah.
Given the emergency.
Mhm.
Thank you. So we'd love to answer some questions from the audience, and Liz Osborne, our Vice President for Public Policy Advocacy, is going to curate some of those questions for us, since we know there are many.
Thanks everyone for joining again. Thanks so much to Hunter as well. I'm getting one question about whether or not HUD is encouraging states and locality PJs to streamline the process of distributing the funding, particularly so that affordable housing owners and developers who are facing operating shortfalls at properties can cover rent for those that aren't able to pay.
Yeah, I mean, I can't speak to every office at HUD, but the general, I can't speak specifically of every office at HUD, but the general consensus in the building is that we really need to get this funding to the local level as quickly as possible. So that's why we're all working on sort of, broader waiver authority to do this. So I would assume the answer is yes.
Thank you. We're getting questions about whether or not HOTMA deconcentration provisions can be waived to allow for additional voucher units at multifamily properties.
That I know multifamily is looking into that. I could follow up with them on that. That's an interesting point that I've not heard conversations with, but I can take that back to multifamily and mention that to them.
Thank you. I know you spoke a little bit about the inspections, where we're hearing that on-site inspections are generally on hold right now, and owners think that they could get more families in if there were a path to temporarily waive these inspections. Just wondering if you could talk a little bit about how you're considering allowing virtual inspections or other inspection waivers.
So we're looking at a number, sort of broad way, all these waivers. 2 points here. I think the first one I would make is all these waivers are optional that were coming out of the Public and Indian Housing Office. So for the public housing authorities, they could choose what they want to use and what they don't want to use. So, though we're looking at a variety of waivers for HQS, and I can't go into real details on that, one thing that we are looking at the same time is how we could develop and work to create technology that would allow for virtual inspections as sort of a stopgap measure in this environment. So this is something that we could, just because depending on how the waiver looks, there may be a lot more flexibility there. If a public housing authority feels that they can do a virtual inspection and we're able to set the technology up, it's something we're working on right now, then they're more than welcome to go ahead and do that.
Great, thank you. Wondering if you and Marion maybe can jump in here too about the difference in how CDBG can be implemented now prior to how COVID-19 was working, speaking to Marion's point on how funds can be used in additional ways.
Sure, and I'll turn that into a question for the Assistant Secretary as well. So on the CPD side of the house, for home and for CDBG, there's existing statutory authority for the money that communities already have to do a suspension of requirements. It's basically a waiver. It's called a suspension under their authorizing statutes. So we should expect that HUD will be providing some guidance about existing dollars. So is that the same for public and Indian housing? Do you think that you'll have the ability to reach existing dollars, or will your waivers only extend to the new CARES Act?
Well, for some of the funding, depending on the waiver, some of them will, some of them won't. But what we are excited about is that the bill also provides us with the ability to the fungibility between the cap and the op funds. And so we're really excited about that ability for public housing authorities to use both sources, because at this point, I can't tell you if you need what a specific public housing authority, if they're going to need a capital expenditure or an operating expenditure. They really need to make that decision themselves. So we're excited about this commingling, if you will.
We're also, I think a lot of people are interested in rental assistance for people who don't necessarily qualify for some of the programs that were included in the third package, like TBRA and PBRA. Are there other opportunities for rental assistance for people that don't qualify under those?
are there other opportunities for rental assistance for outside of the programs that we currently have? At this point, you all probably know better about the what Congress is discussing than I do. So I would I would look at you all to answer that one. But I mean,
and we will as soon as you're off the webinar. We'll talk all about our advocacy
talk all
strategies.
about that, right?
But we know you support the president's budget.
Thank you.
Maybe one last question. Housing authorities are wondering if they're able to apply for the SBA loan, particularly the PPP.
That's an interesting question. I was looking at that and thinking the same one myself. I don't know the answer, and I think that's something we need to look into. We also have a series of frequently asked questions that we update pretty regularly, and I will make sure we get one on that up there as soon as possible to address that, because I don't know the answer, but I think that's a really excellent question.
And since I won't be held accountable, unlike you, I'll go ahead and speculate that I assume that PHAs will not be eligible to apply because the SBA guidance to date has been about private nonprofit organizations. And so I assume that would exclude quasi-governmental entities like housing entities. Whether that would extend to TDHEs, the tribally designated housing entities, I'm not sure. So we'll look for your guidance on that.
Yeah, we'll get something up.
Before you leave us, a couple of points I can't help but make. We would love to see the administration asking for additional funding, and would ask that you please consider making funding including funding in your ask for the HOME program. The HOME program is critical for meeting rental housing needs of tenants in properties that are not going to be assisted through existing HUD programs from PIH or from CPD. And the HOME program has been shown to be a tremendous vehicle for doing that through annual appropriations, as well as through the Recovery Act. So encourage the inclusion of HOME in an ask, as well as capacity building funds through the Section 4 program, so that communities can help understand how to navigate these multiple funding sources that are available in the changed economic environment as a result of coronavirus. And then finally, also, if you would think about what you could do in your waiver package for individuals who are suddenly finding themselves released from prison or jails as a result of coronavirus, to help them reunify with their families.
Yeah, I will take those back and also look into the recently released citizens. I think that's a really good point. It's something we should look into. So thank you.
Okay. On behalf of Enterprise, thank you, Mr. Assistant Secretary. It's always great to talk with you, and we appreciate your time while we know you are so busy.
Well, I appreciate you guys having me. And again, thank you for all the hard work that all of you are doing. And please, everyone, stay safe out there.
Thanks, you too.
Bye.
Next slide, please. We are going to now look ahead to the next recovery package and to talk about our advocacy strategy and what we hope that you will join us in doing. Let me turn it over to Sarah Brundage, who's our Senior Director for Public Policy.
Thanks, Marianne. Next slide, please. So looking ahead, Congress will be back in session April 20th, but the work has already begun for the next package. Speaker Pelosi is leading this effort, and we all initially expected it to be a phase 4 package with a heavy focus on infrastructure. Last week, House Dems had released an infrastructure proposal outline that notably did include the low-income housing tax credit and the new markets tax credit. However, towards the end of last week and over the weekend, Speaker Pelosi began shifting her tone, and we're now hearing that the next package is more likely to be another relief package. It's being referred to as phase 3.5 or CARES Act 2. And what that means is that we're expecting the House will really propose doubling down on the CARES Act. We know they're interested in more SBA loans, more unemployment benefits, more direct cash. That's not to say new proposals won't be included, but they've indicated that they're likely to hold the bigger infrastructure package for a future one. So again, we're expecting to see a House proposal by April 20th, and then negotiations will begin with the Senate. It's hard to say what will change between now and then and how quickly things will move. You never know, in some sense, negotiations could move quickly if it really is, more investments in line with the CARES Act. But again, it's hard to say. This could go into May until we see the next package. There certainly isn't broad agreement on the Senate side in particular that we need another package yet. So we'll see how this situation evolves. But regardless, we'll be advocating for key housing provisions with a focus on critical accommodations and resources that were notably absent from the CARES Act. Next slide. So in terms of what else do we need, as you previously heard, the CARES Act provided $12 million in supplemental appropriations for several key HUD programs, and Enterprise supports these programs receiving additional funding to match the need, notably for the Community Development Block Grant or the CDBG program, as well as Homeless Emergency Assistance Grants. But there were several other key HUD programs that didn't receive any funding that we'll be advocating for. Marian just mentioned one of them. So alongside many of our partners, Enterprise is calling for emergency funding for the Home Investment Partnership Program. The HOME program provides flexible grants to states and local governments to produce and preserve affordable homes. And by providing emergency funds to the HOME program, Congress can give localities the tools to address the specific market needs in their communities, to keep people safely housed, and to preserve and expand the supply of affordable homes. So the proposal we're discussing with our partners would allow home dollars to be administered with a focus on flexibility for owners and landlords to respond to the crisis, from emergency rental assistance to flexible dollars for operating expenses and costs directly related to the COVID-19 pandemic, as well as replenishing depleted operating reserves. These dollars would be eligible to assist housing credit residents and owners. So Enterprise will be sharing this proposal shortly, so stay tuned to our newsletters if you're not already signed up for them. Today in Housing is our daily national newsletter, and Capital Express is our bi-weekly federal policy newsletter, and we'll be sure to share updates on our home proposal and ways to support additional home dollars in the next package. I also want to flag that for existing home as well as CDBG or Community Development Block Grant funds, HUD has the standing authority, as Marian mentioned, to suspend most rules in areas that have major disaster declarations from FEMA. This means, in addition to flexibility being provided under the CARES Act, HUD can reach back to prior grants and allow recipients and subrecipients to make changes. Also on the regulatory side, Enterprise's close partner and our action campaign co-chair, the National Council of State Housing Agencies, or NCSHA, has already sent a letter to HUD asking for programmatic deadline waivers and extensions for the HOME program, as well as for the Housing Trust Fund and the Emergency Solutions Grants programs. So that's a great resource for advocacy asks on the regulatory side. We're also asking for additional funding for the Section 4 capacity building for affordable housing and community development program, otherwise just referred to as Section 4. These dollars could help ensure nonprofits receive additional support, since we're hearing a number of challenges among them regarding accessing the new PPP loans, the Payment Protection Program previously mentioned. And Section 4 is one way we could cover operating funds for struggling community development corporations, or CDCs. Also notably missing from the CARES Act was funding for rural housing. USDA's Rural Housing Services portfolio is often the only rental housing, provides the only rental housing in rural communities and affordable housing for many rural renters, but no additional funding was included. I've included a link here to a blog post Enterprise has about the need for more funding for rural development housing programs. Okay, next slide. So as previously mentioned, the housing credit was not included in the CARES Act. We knew this pretty early on, that it was unlikely given the third package's focus on immediate relief, but we've been told we're well positioned for phase 4, and we'll see how that changes with the shift to a phase 3.5, but we have really strong champions on the Hill and a really strong case to make for needing more housing credit measures. So we're currently pursuing parallel advocacy strategies, both regulatory and statutory. So first, with the regulatory side of things, as many of you know, the COVID-19 pandemic and the response measures are resulting in really consequential disruptions in transactions and construction for a variety of reasons, including understaffed lenders, suspended site inspections, broken supply chains, and local suspensions on construction. Again, we're working really closely with our action co-chair, NCSHA, and we've identified some immediate accommodations that can be provided through regulatory changes. We've asked the IRS for 10 key programmatic accommodations. The first three are probably the most notable. We've asked for temporary one-year extensions of the 10% test, the place in service deadline, and the rehabilitation expenditure deadline. For the sake of time, I won't dig into all three of those, but you can learn more on Action's website at rentalhousingaction.org. But those are three critical programmatic deadlines that we know are proving difficult to meet, and we're asking for a one-year temporary extension on. We're also asking for a one-year extension for deadlines related to casualty losses. These are physical damages to housing credit properties caused by casualty events that render those properties or units to be unsuitable for occupancy. We're also asking for a 12-month moratorium on both physical inspection and tenant file reviews, as well as on tenant income recertification requirements, as well as the IRS suspending their yet to be implemented guidance on actually increasing the number of compliance monitoring physical inspections, and some guidance clarifying the temporary closure of property amenities and common space facilities during the crisis. So you can review all of these accommodation requests on Enterprise's COVID-19 website. And just to share some feedback that our partners are already hearing from the IRS, according to NCSHA, the IRS agrees that all of these accommodation requests are relevant to the current situation and are under active consideration, which is a really great sign. They also agree that they should issue a COVID-19 specific guidance as opposed to relying on existing disaster relief guidance. This is IRS Revenue Procedures 2014-49 and 2014-50. However, while we're waiting for any COVID-19 specific guidance, and it isn't guaranteed necessarily, the IRS has agreed that the relevant provisions of those disaster relief guidance that I just mentioned should be applied on an immediate basis to states with a major disaster declaration. Currently, there are a total of 50 disaster declarations representing 97% of the US population. So these states can move forward with the relief outlined in those revenue procedures. So those revenue procedures provide the ability to extend the statutory deadlines for the 10% test and the place in service dates, and to waive certain physical inspection requirements, but they don't address several of the other issues that we raised with the IRS, which is why we're continuing to advocate for special COVID-19 guidance that covers all of our accommodation requests. We're working with our Hill champions to urge the Treasury and the IRS to act swiftly, but we're also circulating a sign-on letter for organizations to call on the IRS to issue that specific COVID-19 guidance. The hyperlink to the sign-on letter is at the bottom of the slide. It closes today. So if you're not already, please sign your organization on. Next slide. LIHTC priorities. So the housing credit priorities that are statutory, I'll be really quick because I know we're running out of time. We have, in addition to reminding our housing credit champions on the Hill of the need for these key programmatic deadlines, we're also discussing some statutory provisions for the housing credit that would provide immediate relief. We're in the midst of finalizing these, but I think that some of the asks that we're discussing with them include a minimum 4% credit rate. As folks may know, this is one of the key provisions of the Affordable Housing Credit Improvement Act. It's relevant because the 4% credit rate is at an all-time low of 3.12% and is expected to decline even further since the credit rate mirrors federal borrowing rates, which have been essentially zeroed out. And enacting a minimum 4% credit rate would provide parity to the 9% housing credit. And we have precedent for this. Congress enacted a minimum 9% credit rate as part of the 2008 economic collapse. And this provision has broad bipartisan support, so we're really hopeful that this could be included in the next package. Other potential asks related to the housing credit include lowering the bond test from 50% to 25%, unexpected and increased project development costs due to delays are jeopardizing properties' financial viability. So lowering the threshold of bond financing requirements for developments to be able to trigger the 4% credit rate from 50% to 25% would provide much needed flexibility during this uncertain time. It would pair really well with a minimum 4% credit rate. And lastly, two other potential asks are to phase in the 50% increase to the annual housing credit allocation, which is included in the Affordable Housing Credit Improvement Act, but over 2 years to help finance hundreds of thousands of additional affordable homes, and to provide additional basis boosts to developments impacted acutely by the COVID-19 crisis to help them with financial feasibility. So we're working on all of these potential asks with our Hill champions. The action campaign will be circulating our final list of asks for the next package in the next day or so. So stay tuned, and if you're not already signed up for alerts, you can do so at rentalhousingaction.org.
Thank you, Sarah.
We did it.
That's a big mouthful, and we appreciate everyone's patience while we're throwing so much information at you. We did want to save time for questions, but again, rentalhousingaction.org is the website for Action, which is a coalition of about somewhere near 2,500 entities who engage in the development of affordable housing and the preservation of affordable housing through the low-income housing tax credit. So we encourage you to join Action if you have not yet to find out more about our advocacy around the housing credit. With that, Liz, tell us about the questions, and next slide, please.
Thanks, Marian. Well, I would say that far and away the question we're hearing the most is, can we make these slides available, and when will the webinar be posted? We will do both of those things. We can post the slides this afternoon on our website. Happy to do that. The webinar recording will take a little longer to get back from Zoom. I think you all can imagine that Zoom is at capacity right now, so it's taken a little, like 24 to 48 hours to get that back, but we'll post that on our website as well as soon as we get that back from Zoom. We just have a couple more minutes left, so I'm going to try and run through a number of these questions. We're getting a lot of questions around CDBG, so I'm hoping that we can talk a little bit about how those dollars will be distributed to different organizations, what the flexibilities are for those dollars. Can it be used to help small businesses, for example? And will the state have to select the service areas, or will the funds be available to the whole state?
Okay, great. Happy to hear the interest in the CDBG program. And what I'm hearing is a need to do a separate webinar on CDBG. So we're happy to do that, and I'll reach out to the department to invite them to participate as well, so you can hear directly from HUD about it. The CDBG funds are going to flow from HUD to states and local governments, anyone who's ordinarily receiving the funds, so that'll include territories and insular areas as well. And then they get to make the decisions about which activities they choose from a menu of activities. So ultimately, it will be local decision making about how those funds get spent, as long as the activities are coronavirus related and primarily benefit people making up to 80% of area median income. They should be eligible and allowable to be rolled out at the local level. That said, economic development is absolutely a use of CDBG under the current program, so I expect that it will be eligible for coronavirus-related response. Liz, was there more in the question I didn't get to?
Well, there was one more about whether or not the public service cap was lifted for FY19 and 20 CDBG formula allocations.
So I don't believe it was, but we'll look to HUD for guidance on the existing funds because I don't believe it was lifted by the CARES Act automatically. So then HUD would need to take action to lift the cap for those existing funds.
Thanks, Marian. So moving on from CDBG to some of the other programs that got plussed up in the CARES Act. People are curious about what the purposes are for TBRA, PBRA, and public housing operating funds from the CARES package.
Sure. I think the first thing that Congress wants to do is ensure that we keep a roof over people's heads who are losing their jobs or having their income reduced because of coronavirus. And so trying to ensure that the landlords can fill the gap between what people used to be able to pay and what they can pay now. So that the total cost of the rent can be met. So the primary purpose there seems to be making up that difference in rent. There's still a question about then what are the additional uses of those funds and whether we'll see new vouchers, for example, go out the door.
I know we're at time, just trying to run through a couple more questions really fast. Do we have a schedule for the release of ESG funding?
So we don't have a schedule. There is a statutory requirement to get the funds out within 30 days. And so the first part of that is announcing the allocation, but then the next part is putting the rules in place and the guidance. However, it's expected that a lot of those funds will be backward looking and that recipients will be able to reimburse themselves for costs they've already incurred.
Great, thank you. We have a question on resources for housing counselors who are interested in educating homeowners that are impacted about the pros and cons of forbearance. Are there opportunities for home ownership relief loans or grant funds?
So there was not explicit funding provided for housing counseling agencies under the Act. So that's something that folks may want to ask for in this 3.5 or 4 package, CARES 2.0, whatever you want to call it. That would be an eligible use of home funds, which is one of the things that Enterprise is advocating for. But as for right now, we don't see dedicated funds for that at the federal level. However, looking at jurisdictions around the country, we're seeing varying and tremendous response to the need for housing. So there may be resources available on a state-by-state basis. On Enterprise's website, enterprisecommunity.org, if you look at our COVID-19 page, you'll see some blogs about current federal, state and local response.
Great. Well, the last question I had actually was about additional enterprise resources. We know we discussed at the top of the hour the Emergency Action for Resident and Partner Stability Fund. Are there any other enterprise-specific resources for nonprofit affordable housing providers and developers? And I know, Marion, you just touched on that a little bit.
Yep. So that's our single fund that we're setting up, and invite you to take a look at the website if you'd be interested in applying there. Expect more information about that to be rolling out in the next week or so. Also, there are provisions under the law that allow HUD to use some of the money it's received to provide additional technical assistance, for example, for the homeless grants and for the CDBG grants to recipients of those funds. So that's something that we're looking to HUD to see how they're going to task their existing technical assistance providers to get out to communities and help them understand what the funds can be used for, understand some of the best practices, and navigate their way through the new rules. Because again, this is policy making at warp speed. Federal government's trying to get barriers out of the way as quickly as possible, but we expect states and local governments and their nonprofit recipients to need some extra help navigating the new paths. With that, again, thank you everyone for joining us. We'll do our best to get the deck up as soon as possible this afternoon, as well as to get the recording up as soon as we get it back from Zoom. But you'll see here listed our contact information. If you have questions you'd like to ask us directly, please reach out to the Enterprise Policy team. We would be happy to hear from you and get back to you as soon as possible. We know we didn't get to all the questions asked. We apologize for the time crunch, but we'll try to get back to you one-on-one if you want to send us those questions. Thanks very much.